Yo, what's going on, guys? It's your boy Trillionaire Mac. Welcome back to another video. So in this video, we're going to be breaking down AUDUSD, a day trade that I took on yesterday. Okay, it was a quick 13.04% return on investment, only risking 1% of my account. All right, and we did shout this trade out within the Telegram channel. Now, remember, December has been a little dodgy as it relates to the markets. Remember, so it's going to be very important that you guys have a little bit more patience in the month of December, and also probably January as well, when we start to pick up liquidity, pick up momentum, things like that within the market. All right. So in this case here, we can see that essentially I'm not really going to break down the higher time frame too much. We have demand that comes into the market here. Okay, essentially demand comes into the market, pushes to the upside. And really we could refine it maybe, because price does trade back into this area. Really we could refine it to this area here, okay, but I'm going to leave it at the original area that I had it before price traded back into this area. All right, price trades into this demand, okay, we create a failed reaction, and then we have a demand failure here. Okay, so essentially once all that took place, I believe we were right here. And I told you guys, look for price to tap into this area and give us an M15 entry schematic. So those of you who took advantage of the M15 entry schematic within the Telegram channel, okay, that entry was right here. Okay, price taps into this zone here. We get a sweep of liquidity to the upside above this area. We have a mitigation. Price likes to play around within this area a little bit. Taps back into this demand here. Okay, gives us wicks. Essentially, demand is still holding. Demand creates a failed reaction, meaning we weren't able to break through the supply that came into the market with this here. All right, we do wick above, but we see no candlestick body closure. Price pulls back to the downside, interacts with demand once again, and then finally gives us a failed demand and a failed reaction once again here. So the first entry opportunity, okay, would be the supply that was responsible for this demand failure, okay, which was here. Stop loss is right here. Entry is going to be here, right? So as you guys can see, stop loss was around 1 or 5.1 pips. Anytime that happens, remember, round up to the next whole number, okay? Do not use, 5.7 pips as a stop loss or 5.6 pips as a stop loss. If you're not using half numbers or whole numbers, and really, like in this case here, we could have used a half number, right? We could have used 5.5 pips, seeing as though price gave us a stop loss of about 5.1 pips. All right, so keep those types of things in mind. Do not 1, 2, 3, 4, 5. There we go. Okay, do not be too greedy when it comes to trading. Okay, all you need is a profitable method, and with that profitable method, you will be able to definitely have a good amount of return on investment. All right, so first target, of course, is going to be this low here for around 2.9%. Like I said, this wasn't really the best trade in the world. Price did give us 4% here. Okay, remember, whenever we're up 4%, we always close 1% of our trade to mitigate our risk. We leave stop loss where it is, but we just close 1% of our trade. So with this entry, price came back and took us out at break even with this candlestick body closure here. Okay, so that was the M15 entry. So you were either able to close 4%, okay, or it was a break-free trade. If you trade just like me, then it would have been a break-free trade on the higher time frame. Now, what I like to do is I like to take my entries on the M1, okay, or M5, especially if it's within my intraday trading time. So this here was within my intraday trading time. As you guys can see, it was around 10, where was it? Entry was here, 10:26 a.m. on December 14th, yesterday, Tuesday. All right, I was actually on the run when I took this trade, but it wasn't bad at all. All right, not a bad trade whatsoever. So we can see here, price trades into our M15 point of interest. Okay, supply that was responsible for taking out this demand. Price pushes to the upside. We have a sweep of that liquidity. Price interacts with our demand here. We have a demand failure, and then price trades back up into the supply that was responsible after giving us that change of character. All right. Now, I know I went through that kind of fast, but I hope you guys do understand that I have to save some information for my mentorship students and for my course students. Okay, so as you guys can see, our risk on this trade is 1 pip. So what am I going to do? I'm going to increase that to 1.5. Remember, the lowest amount that I'll risk within the foreign exchange market is 1.5 pips. Okay, and our target, of course, is going to be this low here. Okay, if we go to the M15, you guys will be able to see. I think I picked it off of the M12, if I'm not mistaken. No, it was off the M15. Okay, so as you guys can see, based on the M15 time frame, price runs into our target here, which is our M15 low. Remember, same low as our M15 trade. All right, for around 13.44%. So for those of you who are a part of the Telegram community and you're able to take advantage of our higher time frame entries, okay, they still pay out. As you guys can see from the past, let me see, when did we change the trading plan? I think we changed the trading plan in August is when I presented to you guys the new trading plan. So since August, as you guys can see, we've done 27%, 34%, 38%, 46%, and in the month of November, we did almost 60%. I have it right here, I just don't have it calculated. Yeah, so we definitely did over 60% in the month of November. So as you guys can see, just doing the same mechanical things over and over and over again is going to put you exactly where I'm at. Now, for those of you who are a part of the Telegram community, but say, I'm not sure how to take advantage of these trades, I see that they're going through, but I'm not, utilizing it to the fullest of my ability, then more than likely you should join the mentorship program or you should move forward with purchasing the course. The reason being is because the mentorship program, okay, and the course, it's going to take your trading to another height, okay? I'm going to show you guys testimonials within the next few videos that I upload where students have been reaching out to me telling me how much they appreciate the course, how much it's helped them with their trading. We've had more students pass funding challenges, as you guys know. I don't like to show it off too much on YouTube because I'm not really trying to brag, but I do want to show you guys that the way I trade works, it's working for other people, which is more important than it working for me, all right, in my eyes. Okay, so with that being said, look forward to those content videos. I will catch you guys on the next one. All right, I'm gonna do this literally in one take, so I hope it's not too many bloopers and things like that. But so if you enjoyed the video, feel free to leave a like, subscribe to the YouTube channel, and hit that notification icon to be updated whenever I upload a new video. I will catch you guys on the next one. Much love. Peace out.